Hey everybody, it's Prashant here. Welcome to my YouTube channel and thank you so much for joining me in today's video, and let's dive right in. I assume that since you clicked on this video, you are curious as to how you can start investing with $0. And let me assure you guys right up front that this is not a scam. This is 100% legit. You can definitely start investing with just $0 today. Okay, I'm not going to make you wait any longer, and I'm going to tell you exactly how you can start investing with just $0 today. As I'm sure you might have heard already, there is an app out there called Webull, and if you use the link in the description below to sign up for a Webull account, they will give you one free stock. Now this stock will be valued anywhere between $2.50 all the way up to $250. When I first opened my Webull account, they were actually giving 2 free stocks, and the stocks they gave me had a combined value of about $6. Now here's where it gets really interesting. If you deposit $100 into this account within 30 days of opening the account, they will give you one additional stock. And this stock can be valued at anywhere between $8 all the way up to $1,600. When I deposited my $100, they were actually giving 2 additional free stocks. So I got 2 more stocks, bringing the total value of my free stock to just about $22. And I'm going to show you those right now, right here. There you go. 4 stocks. The first 2, which were $2.95 each, and the next 2 that were a little bit higher for a total of $22. So overall, they gave me stock worth $22, which is a 22% return on my original $100. After you open your account, you can actually invite your friends to open a Webull account. And every time they open an account, they get free stock and you get free stock. Now, you might be asking the question, and rightfully so, what's the catch? Now here it is. You must keep your $100 within that account for a minimum of 30 days. If you withdraw those $100 within the first 30 days, they just take the stock back. That's it. Now, I've been thinking a lot about why Webull is running this promotion. Why are they just giving free stock away to anybody who joins up? And I've come up with 2 main reasons for this. First, in 2020, we saw a lot of people start investing in the stock market for the first time. I think Webull is making the bet that if they run this promotion, more and more of those people who are sitting on the fence about investing might open a Webull account. And most of those people will put in the $100 in that account to get that free stock. And that is what Webull is banking on. This will give Webull a large user base, which is exactly what they're going for. And then the second reason is a lot of new investors will deposit the $100 but won't actually invest the $100. That is to say, they don't actually use the $100 to buy stock immediately. They take some time to learn and talk to their friends and figure out exactly what to do. So that money is just sitting in their Webull account but not being actually invested. And what Webull can do is use this money to invest themselves or loan it out to other people and earn some interest. This is something that most banks and other financial institutions do, which is use your money to make them money. This is actually very, very common and one of the primary ways that brokerages like Webull can make some money. Now that you've got your free stock, it's now time to invest your money. Now, when it comes to investing, you've got literally millions of choices. And there are hundreds of thousands of people out there giving investment advice, whether it's on TV, YouTube, or your family and friends. There are also hundreds of companies out there that will gladly take your money to give you investment advice or even invest your money on your behalf. Guys, before we continue with this video, I want to take a moment to ask you to hit that like button and that subscribe button. This helps me out a lot with the YouTube algorithm and motivates me to keep making these videos. On top of that, it is completely free to you, just like getting your free stock on Webull when you use the link in the description below. That being said, let's get back to today's video. Now, let me give you my opinion on what I think is the best investment vehicle for people who are just starting out. Please remember, this is not investment advice. I'm not a certified financial advisor. I'm just a guy on YouTube giving you my opinion. Now, for most people, investing in a broadly diversified index fund is the best way to start investing. Now, if you don't know what an index fund is, it is basically a collection of stocks and bonds issued by many companies, sometimes even hundreds of companies, that investors like you and me can buy into to own a small portion of all these companies. Think about it, if you tried to buy even one stock in the more than 3,000 companies listed on the New York Stock Exchange, it would take you an enormous amount of time, not to mention the enormous amount of money. Instead, you could just buy an index fund that invests in all of these companies for a few $100s. In my personal opinion, this is the way for most people to invest in the stock market. And this is actually how I invest my money in the stock market. There are several advantages to this approach. First, it's got built-in diversification. When you invest in an index fund, you're actually invested in hundreds of companies that index fund holds. So if one company does poorly, you will not be as negatively impacted because there are probably one or two companies that are doing really well, canceling out the bad effect. Second, it allows you to invest in hundreds of companies all at the same time for a fraction of the cost and money it would take if you tried to invest in each one of those companies individually. Third, you are not under pressure to continuously pick winning stocks. The long-term outlook of the US stock market has been and continues to be positive. So if you're investing using this method, you're almost certain to make some gains over the long term. Fourth, low costs. When you invest in the stock market using an investment advisor, a bank, a brokerage, or even into index funds, you get charged a fee. This is usually expressed in the terms of a percentage, and it's called the expense ratio. Expense ratios can vary wildly and can be as high as 1% on the high end. Now you might be thinking, Prashant, 1% does not sound like a lot of money. What are you talking about? Who cares? And you are right, it does not sound like a lot of money, but it is. The thing is, index funds have fees as low as 0.04%. Now let me put this in dollars so that it's actually easier to understand. Let us say you have $1,000 invested in the stock market. At 1% fees, you are paying $10 per year for this investment. On the other hand, in an index fund that charges just 0.04%, you are actually paying only 4 cents per year for the same investment. Which would you rather pay, $10 or just 4 cents? Now let's take this one step further. Let us say that you've been investing for 10 years and now you have $100,000 invested in the market. At 1%, you will be paying $1,000 per year in fees. At 0.04%, you'd be paying $40. Would you rather pay $960 extra in fees or use that for something else? What can you do with an extra $960 per year? Buy a flight to Europe? Buy Christmas presents for your family? YOLO it all on a Dogecoin play? The possibilities are endless. Number 5, index funds perform great. That's right. Studies have shown that time and time again, index funds that are well diversified, such as those that have the total stock market or the S&P 500, consistently outperform funds that are managed by the best fund managers out there. That's right. You could end up spending much more money for poorer returns than you could have gotten if you had just invested your money in an index fund. In fact, a scholarly paper published in the year 2000 showed that actively managed mutual funds actually underperformed Vanguard's S&P 500 index fund by, get this, 3.5% annually over a 10-year period, 4.2% annually over a 15-year period, and 2.1% annually over a 20-year period. Keeping this in mind, it makes absolutely no sense to invest in a high-fee mutual fund when you could get better returns in a low-fee index fund. Not only would you make more money in an index fund to begin with, you would actually pay less fees, which means you get to keep more of your money. It's a double-win situation. Now, of course, if you did not want to invest in index funds, you could definitely go and pick single stocks that you believe in, maybe like an Apple or a Tesla. Or you could even buy cryptocurrencies like Bitcoin or Dogecoin. Just remember, the risk in investing in a single stock is much higher than investing in an index fund. And investing in cryptocurrencies can be super volatile. In fact, within the last few weeks, we've seen Bitcoin swing from a high of $63,000 down to $49,000 and back up to $57,000 today. And we all know what happened with Dogecoin. It went from 4 cents to 42 cents and then back down to trading at about 32 cents today. And let's see what happens on May 8th when Elon Musk hosts SNL. If he talks about Dogecoin or SNL on national TV, it's possible that Dogecoin skyrockets and maybe even hits $1. Now let me put a disclaimer. I don't know if this is going to happen. I don't know if Elon is going to talk about Dogecoin on national TV. I don't know if Dogecoin is going to go up, down, or sideways. I have no idea. So if you're thinking about investing any money into Dogecoin or any other cryptocurrency, please remember not to put any money in there that you're not okay losing completely. So here it is, you guys. A way to start investing with just $0 is to use sign-up bonuses from apps like Webull and Robinhood. If you want to get started investing today, you can use my referral links down in the description, both on Robinhood as well as Webull, and they will both give you free stocks. Now remember, it is my opinion that the best way to invest for most people is to invest in low-cost, well-diversified index funds like Vanguard's S&P 500. The most important thing to do is to remember to invest for the long term. Invest when the market is high, invest when the market is low, and hold your investments for a long time. Remember, time in the market is much more important than timing the market. Let your investments grow for years and years before selling and withdrawing them in retirement. So that's all I have for you guys in today's video. I hope you found today's video interesting and entertaining, and I hope some of you will take the time to educate yourself more about investing, and maybe even use my referral links in the description below to start investing with Webull or Robinhood today. Please remember to hit that like button and that subscribe button along with the notification bell so you get notified instantly when I post a new video. I post at least one new video every week with great new financial content, and I would love to see you back here. Also follow me on Instagram and Twitter. I will leave the handles down in the description below. Thank you so much for watching, and see you next time.